What is up, everybody? Hope you are doing just super duper well. Wanted to kind of wrap this month up with kind of what's going on here in the Bitcoin world, and thought I would share just some opinions on what I think is going on. We talked a little bit about this last time, and so we'll actually kind of jump. These are all projections, right? So, and it's kind of just based on really what the pattern is of the historical pattern of behavior, and as we get a little bit closer, 2025, probably the second half of 2025, we'll have a little bit deeper analysis into some things, but still kind of looking at again the primary behavior of just of people. And so with kind of the month ending here, I thought we would start. Actually, let me change this from a logarithmic view. um, I thought we'd start with kind of like the monthly candle that's going to be closing right here in really 7 days, 9 hours. No, am I on the 7 hours? Sorry, I was gonna say this is a monthly. So you can kind of see up here where it says 1M. That definitely tells you that it's the monthly chart. Each one of these candles is a month. And kind of what I wanted to talk about is really what this looks like from a structure standpoint, in my opinion, and kind of what the options are. Now, you're not going to be too surprised here. It's going to go up, it's going to go down, or it's going to go sideways. Surprise, right? So, how do we get a little bit more insight into things? So, really, when you zoom out on this 1 month, you can kind of see a couple of different things happening. Number one, this is what is known as a bullish flag, where you have this big flagpole coming up and it's painting the flag itself. And that is typically bullish, meaning that it's going to go up. Long term, I'm obviously extremely bullish on Bitcoin, extremely bullish on crypto. But in the short time frames, I'm neither bullish nor bearish. I'm just kind of focusing on the analysis and the technical side, and I have really just let that lead my decisions. I had some really good trades over the last week or so, kind of just really soaking up some of these, just what the market makers were doing with these liquidity pools and trying to figure out maybe how to make some extra money. And so a couple of different things that I want to point out. Number one, on this bull flag, really what you see is you kind of see, if you look at the bodies of the candles, right, the colored in squares, not the wicks, and I'll make it even a little bit bigger here, is really we've kind of broken above, and really now we're coming up and down, up and down, up and down. But if you look at where it's ending, it happens to be this range over here. And so you've kind of created this little area of resistance over here, and then it's flipped and now it's acting as support. That is very bullish. That's a very great thing. That doesn't mean we won't have deviations down to the bottom here, and as we get into smaller time frames, you'll kind of get a better understanding what I mean by that. But that's kind of step one, is I just look at really from a bigger picture things, how are things looking? Well, they're obviously pretty bullish because it's gone from here, run up. And this year's just in general been extremely positive. And so that's kind of the first thing. The second thing is this, that really when I look at kind of on the monthly candle, we really need to fill, I think we're going to need to fill the liquidity first, that's down in here before the rates actually cut in September. I think the rates are going to cut in September from what I'm like reading and seeing what other people are saying. Jerome Powell speaks tomorrow, so we're going to have an idea. And unless he's just like super certain about something, I think markets are kind of pricing in rate cuts already. There's a rally on a handful of different things. And so really what I'm looking at right here is this liquidity down in here. And what I mean by that is this giant wick. Now we'll see where the day ends. But if the day right here, or I'm sorry, the month started right here at 62,000. It went all the way up to this price, and then obviously came back down. It's currently at the 66.5 range. And I think that, on the weekly chart, you can really see this as well, but it's really respecting this line, right? It's resistance, resistance, resistance. Now it's coming down. It's going to be support before it can kind of take off. So when the rates get cut, I think that's going to be very bullish, and it's going to cause us to kind of fill in this open interest up here that I've referred to in the past, which is simply, if I delete this and create another one, we'll see it on the other chart, but it's really kind of this section right here that we really haven't touched. We've really never retested this, and it's just kind of an untested area that the markets typically you're going to want to definitely want to fill that, because we need to do two things. Number one, the market makers themselves want to get rid of any long positions before it actually goes long, which just means that all these wicks to the downside, your stop losses are down in here. So you put in a trade right here and you say, okay, if it breaks below this, I want out of the trade because it's probably going to go to the downside, just like this giant wick just showed us. So this wicked out a lot of people. The market makers are going to be the ones that run these exchanges and actually fill these orders. When you place a buy order, they're placing a short position, right? They're actually they're counter doing, placing the trade. But anyway, not to get too deep into that, but the market makers do want to liquidate any long positions before, so that's how they make money. So we can kind of stop people out here is what they're thinking, and then it goes long. So that is kind of the bullish approach. It's also respecting this trend line. Again, bullish approach. But I do think that one of the considerations between now and maybe the end of September, which would be one candle for August and one September candle, is we're going to retest this area again. And what I think that's going to look like is anywhere from testing this bottom wick of 53,000, 52,000, maybe even, up to just this $60,000 range. And so if we were to, just so I have visuals for you, if we were to kind of look at it and say the bottom, because this is just a range right here, and it's just going to bounce around in this range until it makes a decision. So we're looking for the deviation of these things. And we had one deviation up here, and we're having some deviations down here. But now that we've had this, before we go up, typically what you're going to see is market makers want to retest that by filling 50% of this wick, potentially 100% of this wick. Not always, but that's kind of what I'm thinking. So if we kind of go from the monthly chart down to the weekly chart, you can see exactly what I'm talking about, right? Still, in fact, I'll kind of show how it's respecting this line as resistance back in here, and then it flips and it comes up here, and now it's coming back down to test this as support. And I just think that's crazy, right? It really respects it. I mean, you can move the line however you want, but I think it's interesting kind of how we had a lot of wicks in here, and just happened to be where this stopped over here is at 55,000. And so we're going to be in this channel right now. I think we're probably, I don't know if we're coming straight down or not, but at the end of the day, this is kind of going to go up and down. I think the most likely scenario in some form or fashion is going to end up looking like this, where it's going to go sideways in here. Maybe it comes down and test this first, but ultimately I think that we're going to come up, fill this open interest, and then probably right about the time that, in August, this is not drawn to actual time frame, but I think we're actually going to have to come down here. We're going to fill this before we can ultimately take off. And that is kind of my kind of thought process is this is going to test the support, which is something that I think that you want to see, is you want to see multiple tests of support, just like over here on the left side of things. You can see that, we didn't break above it until we really tested it enough to break it. And now we're going to do the same thing. We need to test it to either break it or go the other way, right? But we just need to test. And so I think we're going to see some retests, which is good. But ultimately, I think this is going to get tagged. This is going to make everybody think it's a breakout, it's a long. And so everybody's going to go in here thinking we're going to go to the moon, which is fine. But the market makers and typically the smarter trade, the smarter money is going to look at this and be like, gotcha. And the stops on these longs are going to be anywhere in here, definitely like above this box. And so people get in here thinking it's going to go up, and the market reverses, comes down. It needs to retest this area, fill in these liquidity pools that are down here, and stop everybody out. Once that's done, now it creates a deviation, which is confusing for people. It will actually cause people to short here as well. But I think the rates are going to get cut sometime in September. Again, ignore the dates down here. I just can't draw that small, I guess. I'm not that talented with the mouse. But if you were to collapse all this down into a very short period of time, that's what I'm expecting. I'm expecting something to happen in here. You never really know. Again, it's range bound. So maybe we come down to 60,000. You can kind of build a position, maybe retest down here. That would be cool. But ultimately, I'm thinking this is the main area I've said in other videos that just has a lot of open interest. And there will be a lot of liquidations kind of in this area, and there could be even a little bit more of a wick that goes above it just to really mess with some people. Typically, whatever you think is going to happen or what everybody's saying, um, that confirmation bias kind of spreads, and really the markets do the opposite. And this is really why you can't like watch Twitter, you can't watch YouTube or X or whatever for all your advice, because the more and more people say this is going to happen, I think the less and less likely it will happen unless the price action says the same. And that applies to the short term, not the long term. So that's kind of what I'm thinking, is that we really, if we're going to go up, we must get a close above this 71,000, 71.5 area. We got to get a body close. So if I zoom in here a little bit, I need a candle like this, either one of these, where the body of the candle closes above literally these right here. That's the key. That's step one. And that confirms technically that it's bullish. And this is another reason that I think that we will get that. And it'll probably wick up to here or something like that. And then it'll sell off really fast. So I think that we'll get a candle close in this range right here, which is technically a confirmation that we are bullish, which is true. It would mean it's bullish. It is going up, but we might. I think that we're gonna have to refill this before we go up, and I could be wrong. And maybe this all happens in the next week. Maybe it happens tomorrow when Jerome Powell speaks. I don't really know, but this is kind of a pattern that I'm looking at. I'm looking for some sort of sideways action to ultimately fill this first, then to ultimately fill this, and then it's pretty much off to the races. Again, really, if they're going to be cutting rates, the more they talk about that, the more that's going to get priced in. And so we may not come down. We may just come straight up. Maybe this was the down. We come up first, and then we're going to refill it. So we'll see. We'll see what happens. When you kind of go down to the daily time frame, let me delete this guy. This line was just the halving, I believe. And so again, it's just more candles, but it kind of paints a little bit more of a picture of we can't seem to break above this. We're retesting it, we're retesting it, we're retesting it, we're retesting it, but we never fill this extra open interest up here where people are wanting, to take profits, or they're wanting to create short positions. We're never getting there. And so that's kind of one of the things of where we have this small range inside of this big range. If you think of both boxes as the full range here that we're kind of sideways bound in, that is like that's the picture frame, if you will, right from here to here. It's just what's it going to do in the middle. I just think that we have to kind of touch those. So anyway, kind of another thought, really interesting, a little bit different anyway, is if you're on LinkedIn at all, you can go find me at LinkedIn. It's Brian Lochner, and I'm posting a little bit more and more content, and we have a lot of scheduled posts for a little bit more of the macroeconomic news about debt and the debt cycle, economic shifts, and what recession factors we're looking at, not just in the crypto market, but in the real estate side of things, and our broader economy. And so if that's something you're interested in, that is one of the things that we really look at for kind of the more macro view here is, dude, Bitcoin could literally be the greatest asset in the world, and it could create these little deviations that mean nothing, and it could go to the moon. But if we're in a really tough economic situation and people feel like they have to sell their assets, they have to liquidate their securities, their equities, whatever, they're going to sell Bitcoin too. And I've said that before, but just another reminder that like there is nothing, Bitcoin's not so precious that people will literally hold it forever. That is the truth for people who bought it a long time ago, but the majority of retail people who have gotten in, which if you really kind of look at it, is going to be after this cycle right here. So people who were like $30,000 and up, they've kind of doubled their money. They're sitting there thinking, dude, I kind of need this cash. I've doubled it. I'm going to go ahead and I'm going to get out. It's starting to fall anyway. We're down to 60. We're down to 50. I don't know, depending on when all this happens. But they're going to see it falling, and people respond to candles like this, right? They sell into this, and that's what causes the acceleration and causes these giant candles to happen. that are red and on green. You know, when it's really greedy, you know, you get this, hey, everybody's buying in, everybody's buying in, everybody's buying in, like it's just going to accelerate everything. And so that's kind of the thesis behind it. But I'm expecting that if the economy does shift, which again, personal opinion, doesn't mean I'm right, but it is my opinion that we have to shift, because there's not really a we're not maintaining interest rates from from the Fed standpoint. We're not killing the demand enough. And so you kind of have to look at this, quote unquote soft landing that they talk about, or Janet Yellen, I believe, even said that we've already achieved it. That's not, I don't really see that. They're looking at cuts already. They start cutting rates before the recession actually technically happens. Although, let's be honest, all the technical definitions they have for recession were already in it. So they just keep moving the marker, if you will. Um, but at the end of the day, again, it's just looking at these factors and saying, all right, how do we protect ourselves? For the majority of people listening to this in my, my Facebook group that's private, most of you pretty much bought and you're kind of just holding, and that's perfect. This is just informational. It doesn't necessarily mean you need to take action on it, but I do like to keep everybody informed when I think it makes sense. I think we're in a very interesting spot right now of kind of holding this level. Again, I do think that this is actually rather bullish because of where it is. And also, if you kind of look back here at, oh, you're not going to let me go back to 2019. Hold on. Fun fact also. Where did it go? We are really consistently kind of hanging around that market cap of silver. Gold is next. We're coming for you. And so if I can stop clicking the wrong charts here, let me find. That's the market cap. Hey, CME futures, dominance. What am I doing? Here we go, BLX. All right, so kind of back to this chart. Really kind of interesting is if you kind of look back here at 2019, before all the craziness happened. Craziness just simply meaning, the run-ups and stuff like that. Man, I don't really have a cool way to show this side by side. How am I gonna do this? Dang. Well, maybe I'll make a post of side by side pictures, but I kind of want to show you really kind of getting this. We have very similar patterns. Yeah, this is going to be impossible. Okay, we have very similar patterns right now that we're looking at that again are definitely bullish, but it doesn't mean that we won't have some deviations to the downside first, where smart money will really build their long positions. And that will cause a lot of momentum as well to start the quote unquote rally. And, in 2025 is really where you're going to see this. In fact, let's take a fun little gander at really what these runs look like. So this was 2017. Again, we can just, these candles are simply representations of human emotion. And so there's nothing secret sauce about them. There's just a lot of variables. And in aggregate, when you take all the human decisions and you mix them together, you actually realize that this is pretty predictable. Pick any stock you want. I'll show you the same thing over and over again. And it's just because of reality. And so if 2017 was really the high, kind of look what happens at the beginning of each year. So here's like December-ish, right? This is a deviation. I wouldn't freak out about this. But the bottom line is the beginning of that bull year, that bull market year, is the bottom for the run. Not the bottom, but I mean, like, there's no more deviations to the downside. So like at a simplistic viewpoint, you could say, all right, in January 2025, it should be, number go up, which is a dumb investment philosophy, but just go with me for a second while I kind of just show you some of the similarities. Again, what was the market top over here is going to be 2021, right? So let's take a look at 2021 in January. So here is January-ish right in here. No more deviations to the downside. But prior to that, yeah, we got some deviations. We got some pullbacks, and that's completely normal. In fact, if you look at this time frame of the year, what do we see? We see a big run up right in here, run. July, it happens to be July. This is kind of crazy. A big bull flag consolidation. What do we get? We get a big, deviation to the downside. Why? Because it needs to fill this liquidity pool that's happened. Um, and it needs to take out any shorts that the market makers want to take out any shorts here so it can make a profit before we go and run. And so just to keep journeying here rather than, and then I guess that's it. I was going to say I don't want to get too off the beaten path here. For funsies, let's go back and look at this one in July. Again, it doesn't always mean the same thing, but here's June, here's July. We definitely had a big run up here, some consolidation. We had a deviation to the downside. It was a little bit earlier, so it was in July. But then we actually had another one here in September. Now, this is not you can't copy this and be like, dude, totally, this happened here, therefore it'll happen here. Again, we're just literally looking for trends. We know there's going to be pullbacks in a healthy market. Even in a bull market, you can see that we're getting these big pullbacks, and that is totally normal. If I remember correctly, they're like on average 20 to 30% pullbacks, which is great. Nobody needs to be trading them. In my opinion, they're insanely difficult to trade. You basically just, if you believe in the asset class in the long run, just friggin' buy it now and run with it. But prior to the what would be January 2025 in this case, we're having some pullbacks. We're experiencing some of the deviations from the trend because that's how the market makers make their profit. And it also kind of shows to the health of the market of like people who have been waiting and waiting and waiting. And I thought this thing was going to take off forever ago, and it never did. Like they will quit right before it runs. And that's in every asset class, and same thing on the other side, right? They quit before it runs. And then also on the downside, they think it's the top, and it's not. And they just wait it out, and it'll just collapse on them. And then they won't sell, which is a whole other thing. At the end of the day, if it's an asset class you like, buy it, stick with it. Again, my ideas are just ideas, and I just like to share them with you. So hopefully that's a value to you today. If there's anything else that you guys think would be kind of interesting to look at, I'd love to dig into it a little bit more. Just wanted to kind of share my thoughts. Again, if you are on LinkedIn, love to connect with you, and definitely come check out some of the stuff that I'm going to be talking about. Jerome Powell speaks tomorrow, yes, on the 1st. And so I'm expecting a lot of volatility in here. We've already had a lot of volatility in here for this entire week, which is to be expected when there's big question marks out there. But overall, should be a good one, and we'll see what happens, and we'll see what the craziness looks like, and go from there. Y'all take care. See ya.